Hello friends, couple of months back I had done a video on straddles, and at the same time a lot of people had asked about the theory or the rules or any setups for strangles. Of course these are on positional basis. So this is a video where I talk about how to identify good low risk strangle charts again on Nifty and for a positional trade. So that's why it is always on monthly expiry, nothing to do with weekly expiry. And the setup is the same. Just to give a background, we are talking about January 2023, and if we today is expiry day, so we have the last chart of 25th January expiry. So let's start from 1 week before the January expiry started, so which is about 22nd 23rd of December, because I think that was 1 week before the December expiry. And this is the chart where Nifty was around 18,100 around 23rd of December. So 23rd of December, 18,100 is the Nifty spot level. So what we have to do is plot a triangle which is 300 points on either side, which means 18,100 plus 300, that is 18,400 call, and 18,100 minus 300, that is 17,800 put. And that will be for monthly expiry of January. So I already have that chart here. So since Nifty was at around 18,100 on 23rd December, which is 1 week before the December expiry, in other words 1 week before the January expiry started. So we plot a triangle which is 300 points higher in the call, which is 18,400 call, and 300 points lower, that is 17,800 put. So this is a triangle again on 0.5% box size, and the setup, the rules are the same. Plot a triple moving average and any double bottom cell below the triple moving average which you get here. In fact, this is 22nd of December, and that triple moving cell came here about 320, 330, which was the total of the triangle, both premiums put together. In fact, there were some questions about what is to be done. So this is basically, so what is shorting a triangle? Short the 18,400 call and short the 17,800 put, and the total of that is about 330, where we get a double bottom cell below the triple moving average. And after that, tracking straddles is you need to be slightly active in the market. For strangles, you can call it a slightly less active, or you can even call it a passive trade. So after that, it is just a question of following a stop loss. Initial stop loss was just 30-40 points above the shorting level. After that, just track Nifty as long as Nifty doesn't go to one extreme. Now what is the extreme here? One extreme on the higher side, extreme is 18,400. So you need to watch out only if Nifty settles above 18,300, or on the lower side, the lower extreme is 17,800. I am talking about these two levels. So maybe below 17,900, you need to be cautious and you need to watch the chart. So till the time it is between these two plus minus 200, there is nothing to worry. This triangle will keep coming down. And as luck would have it, January was a very good month for these kind of trades. And from 330, it came all the way over here. In fact, yesterday it was near 5. So of course that is not the case, because what happens is once we get to 1 week before the January expiry. So what is that? So 1 week before the January expiry, which is like I said, 18th or 19th of January, Nifty was back to 18,100. Of course, there's no need to be very precise around that, because we are anyway talking about 300 higher and 300 lower. So around 18,100, we go back to the 18,400 call of February and 17,800 put of February, monthly expiry. So this is 18,400 23rd February call and 17,800 February put. And once you plot that, wait for a good trigger below the moving average, and this is the trigger you get on the same day. In fact, that trigger came around 395 or so, and after that it came all the way down to about 320 in the last 4-5 days. And today, because of the big move in the morning, this is a signal to exit. Not this column, but there was a triple top buy after that. So this exit came at around 335. So here from about 395 or so, 335. So you have got a 60-point trade, and that is an exit. And why exit? Because by that time everyone knows Nifty has come down all the way to 17,800, 17,900. So then we plot the next triangle. Now that Nifty is near 17,900, because it has come to one extreme. So we plot 300 points higher call, which is 18,200 call, and 300 points lower put, which is 17,600 put. And this is the current day, 25th. So here we got a sell over here at about 335. and it has closed at 330. The stop loss will be the high of this anchor column, which is about 375. So it is just a risk of 45 points, which in any case was the profit from the February strangle. The profit from the January strangle was completely different. And this has to be carried. Of course, now that we are coming into a budget week, that is something which you need to decide whether you want to carry on with this or just book and wait for the budget volatility to get over. But in a nutshell, this is the same rule as the straddles. The only thing is, instead of a straddle, we are talking about a strangle where it is 300 points higher for the call and 300 points lower for the put. And once you have a move which is more than 200 points, which is going towards one extreme, either towards the call strike or towards the put strike, then you have to exit the previous one. In any case, most of the time you might get an exit from the trade like we saw in the previous February strangle in the morning today, or in any case you have to book that and plot a fresh triangle which is 300 points on either side from that level, and after that it's just carrying on and trailing it. Again, for example, now Nifty is at 17,900, let's say, and for some reason Nifty goes to 17,700 or maybe 18,100 in the next couple of days. So you have to exit this and plot a new triangle with that as the base price, whichever it is, 18,100 or 17,700. And then it's not just taking a entry without looking at the chart. Plot the fresh chart, wait for a good setup, because why setup is important, the rules are very clear. Once you plot this chart on a 0.5% box size, wait for a double bottom sell below the triple moving average. So this was in fact a quadruple sell, which is a very powerful sell, and over here this is the stop loss. So once it goes above this, in fact even here now above 360 you will get a maybe an anchor column. So of course for that Nifty has to move quite big, almost like 200 points either direction. And when I say either direction, because this is a call plus put, so even if Nifty goes up by 300 points, the call will take this up. If Nifty crashes by 300 points, the put will take this up. If Nifty remains within plus minus 200, this will keep drifting down. So that is the idea of trading strangles on a positional basis, completely on the basis of charts. So here only one thing is, in fact I think today VIX was more than 10% up intraday. So if that continues, what that means is there will be volatility in the market and Nifty will move 200 points very fast. So there you might have to, maybe you might get exit in this and you have to look at something else. And if market becomes really volatile, you might not get the next entry, and that will keep you out of any strangles short. And I have seen over the years, unless we get a COVID type situation in February, March 2020, you typically get a good short strangle almost 8 to 9 or maybe 10 months in a year, and only 1 or 2 months in very, especially when the market is weak or bearish, there you have to step aside. But that's good enough, because if you get good trades for 8 or 9 months, stepping aside for a month or two is not a big deal. So this is all about shorting strangles. So hope you like this video. Do subscribe to the channel, like it and share it. Thank you.